Greetings everyone, Jake Bernstein here with the weekly Chimpcast for the week beginning the 11th of January 2016. Recording being made 10th of January, Sunday at 7:40 p.m. Pacific Time, USA, from my home offices in Santa Cruz, California. So looking at the big picture, the trades you make and the investments you make will depend upon the time frame you select. As a short-term trader, if you're familiar with the moving average channel method that we've discussed in our webinars, you will see from the chart I'm about to show you that we had a sell trigger, and if you were faithful to the method, you achieved your first profit target. 2 complete consecutive bars below the bottom of the channel, Williams below its moving average, profit target 2 times the width of the channel achieved. If you are short the market on a short-term basis, you have a trailing stop locking in 75% of your profit, and you have a break-even stop on one position. You will apply the 5% rule or the 2% rule depending on whether you're in a stock or futures market for the trailing stop on the last position. So the short-term trend is down. One thing I will tell you is this: many stocks tend to bottom on Monday. Monday tends to be a good day to not sell, but rather a day to buy. Market sentiment, as measured by the daily sentiment index, is under 95% bearish, or in other words, less than 5% bullish. That very low number for small trader sentiment has been correlated with as a leading indicator of market bottoms. So in terms of what we're looking at, with the market now down again, the probability is that prices will recover, but the technical side of the market, namely the moving average channel, is bearish for the short term. As an investor, you have a different situation. As an investor, you've got lows that were made back here, and we are now in the range where this low is made as well. And so for all intents and purposes, we are at or below we're at a very important support. There is no weekly sell trigger. It would take 2 complete consecutive bars below the bottom of the channel and Williams below its moving average to give us a sell. That has not happened. I underscore that has not happened. Therefore, I cannot turn bearish in the intermediate term. On the monthly chart, again, define your time frame and make your decision based on that time frame. We are at support which has held 4 times, 5 times in the last several months, and which held back in 2014. We already warned you that there would be considerable resistance at the recent highs. That has happened. So all in all, don't throw the baby out with the bathwater. Yes, there's a lot of bad stuff happening in the world, but there's good stuff too. And so we have to be balanced and go to our technical indicators. It would be easy to panic. Panic is easy, intelligence is difficult. So again, we tell you, find stocks you like, take the next buy triggers. We'll recommend some of those stocks when they come. The time right now is not to be a time to sell. The time now is a time to buy, a time to look for buy triggers. Look at your divergence indicators. If you're not clear on momentum divergence triggers that we use, take one of our webinars which we're offering at a discount price. That does it for now. We'll see you again next time. Happy New Year to everyone, best of trading, and remember, don't panic. These are buying opportunities. Wait for a trigger. Don't catch the falling knife. Jake Bernstein for the weekly Chimpcast, signing off for now.